All right, guys, testing 1, 2, 3, testing 1, 2, 3. How's everybody doing today? Type in anything in the chat and acknowledge that you can hear me. Don't believe I'm showing my screen yet. So let me do that. All right, type a T in the chat if you can hear me and see my screen. Type a T in the chat if you can hear me and see my screen, please. Or yes works, or 10-4. Yeah, T is in Tom. All right. All right, gang, how's everybody doing today? I hope you're well. Hope the markets are treating you well. Hope everybody out across the nation and world, for that matter, are doing okay as far as the cold weather fronts are proving very difficult for a lot of friends and family and colleagues. So best wishes to all of you out there where you may be affected. All right, how's the sound now? Yes, what we're going to talk about today is the market forecast formula, a proven method for finding profit patterns across all markets, stocks, ETFs, commodity futures, currencies, FX. I appreciate that. All right, let's go ahead and get started here. We're a couple of minutes past the hour. My name is Silas Peters, founder, head trader, seasonal swing trader. You are here to see market forecast formula. And I want to say thank you. I appreciate you being here today. I know everybody's got a lot of things going on in their life, and that might be just as simple as getting some heat. So I do appreciate you taking time out of your day to listen to this presentation. Very excited about it because it's something I actually use. I believe in it, and it's something I've been doing for several years. And trust me, if I didn't work, I would not be wasting my time, and especially not yours. So I'm very excited to dive right in and talk about this topic here. Don't worry, it's nothing complicated. If you have questions throughout the presentation, feel free to post your comments, feedback, questions, anything like that. I'll try to address them through the presentation. It's very important for me to get through the presentation, and then I'll come back at the end. I'll answer all of your questions. We'll look at markets and all that good stuff. So let's go ahead and get started here. Welcome to everybody. Welcome to everybody across the world that is joining in today. And again, my name is Silas Peters. I'm a founder, head trader, seasonal swing trader. Now, if you've ever been on a call like this, it may be a little different from what you've experienced in the past. I really do want to help you walk away with something that you can begin applying today. In fact, we're talking immediately. But before we begin, we must start with the regulatory risk disclaimer as required by the governing bodies as well as our attorneys. Past performance does not necessarily indicate future results or substantial risk of loss associated with trading. Only risk capital should be used to trade, etc., etc. This means the Cliff Notes version of all of this legalese means don't trade with your rent money, your mortgage money, your child's educational funds, your milk money, ice cream money, whatever it is. Trading is risky. You can lose money in trading. Now, let's talk about the fun stuff. Let's get right into the meat. Let's talk about the key themes for this presentation. First one is going to be complacency. Investor sentiment has swung to an extreme. Market participants shedding bearish bets, adding more and more bullish bias. Put call ratios fell to multi-year lows. Now we're starting to see a few cracks over this week, but the complacency is certainly there. Next, we're going to talk about the bubble monitor. We're going to take a look at what this is, how to analyze it, and we're going to discuss a key sector to watch. Liquidity, don't fight the Fed. The Fed's liquidity and accommodation measures sit at the highest level on record. And we're going to talk about markets to watch and potentially apply our dry powder to that can cushion upside or potential downside that may lay ahead. And then we're going to look at a handful of personally selected markets that have room to move both to the upside and potentially the downside. So indices, what's in store for indices? We're also going to talk about that. We have much to cover, but in a general sense, over the past 20 years, the S&P 500 has shed 0.6% in the second month of the year, matching the second weakest monthly return on the calendar. But in this market and economy that's become so dependent on economic stimulus and the pandemic recovery, what is normal seems to be of secondary importance. I'm sure most of you can agree. Before we get started here and take a deeper dive into these themes and what lies ahead, let's make sure we shut everything down, remove all our distractions. It means closing your browser tabs, logging out of Facebook, put your phone on mute. We're going to be together for about 60 minutes or so. Even though we are recording, I can't guarantee there will be a replay, so you want to make sure to listen closely and take good notes. So let's go ahead and get started here. With that being said, let me properly introduce myself. Again, my name is Silas Peters. I'm a proud husband, father, son. This is myself and my two beautiful blonde-haired, blue-eyed beauties on the right, standing in front of my alma mater at the University of Alabama. 3 days after I graduated UA, sold my car, packed up my belongings, and I drove north to the great city of Chicago, the old Windy City. And speaking of cold, boy, is it ever cold up there. I'm from deep South Alabama on the Gulf Coast, near the Gulf of Mexico, and nothing compares to the Chicago winters up there. So 3 days after I graduated, I did land in Chicago, and it's here where I cut my teeth in the commodity markets at the Board of Trade. Here, I was bitten by the trading bug and never really looked back. While there, I helped run a global trading desk, placing, managing books of trades across the Americas, Asia, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, other large floor spec traders. Also been a part of building and managing several futures equity brokerage firms, managing operations, trading, back office sales, and support. Also worked as a private family office investment consultant for ultra high net worth individuals. Hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. But it wasn't always easy. There was a learning curve, several obstacles and hurdles on the path to where I am today. First step was obviously learning. School does not teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think so, but ignorance and greed cost me my profits. I blew up an account, then I blew up several others in what I like to call revenge trading. Finally went back to my roots, settled down, worked my process to find overall consistency. But I want to ask, why are you here? You're here to learn proven profit patterns, patterns that are consistent, repeat themselves literally over and over again. They're driven by underlying fundamentals. They're pushed and pulled by significant influences. They're based on what is actually occurring in the world economy and the environment. So what does that mean? Well, this stuff right here, it gives us an edge. We are trading in line with real data, data we can't make up, data that is in front of us and really and truly eliminates the guesswork. And why is it important? Because when we're armed with these weapons, we can become consistent, we can position ourselves for higher odds trading and investing, and we can ignore the outside noise. And therefore, we can position ourselves for best success. And that's really what it's all about. And what I found over my years of trading, research, and analysis is there's no holy grail. Stop looking for it. Stop chasing shiny objects. Stop clogging your charts with useless indicators. And you must put in the work only if you wish to succeed. And that really goes without saying for anything in life. You've got to put in the work if you want it, you wish to succeed. And so that's what we're going to do today. I'm going to show you a simple 3-step process that can eliminate hours of research, screen time, analysis by following a repeatable approach to the markets. This is the exact same formula I use each and every week to know how to be positioned in the market. I mean, no guessing. We know exactly what we're looking for. So before we get to the forecast formula and how repeatable this process is, let's talk a little bit about what is happening now and what we're looking at in today's market environment. First one is Fed liquidity. Fed's balance sheet now sits at the highest level on record, which has allowed a bid to be maintained under stocks. Quite simply, when the Fed is providing liquidity to the market, it's prudent to be buying dips in equity prices. We'll be keeping close tabs on the Fed balances through the months and years ahead, as it has provided an effective binary look at how to position in the markets through the past decade. We want to be bullish when assets are expanding and bearish when assets are contracting. As I said earlier, over the last 20 years, the S&P has shed 0.6% in Feb, matching the second weakest monthly return on the calendar. But again, this is not a normal market. The Fed has been right on point, providing the liquidity and accommodation that the market needs to take any stresses out of the system. Based on what was just said in the previous slide, it's prudent to maintain a bullish bias over the longer term, so that as long as the Fed remains in a position to backstop this market. But near term, we have to highlight the risk. Investor sentiment has swung to an extreme as the market sheds these bearish bets and a bullish bias is adopted, which alludes to the complacency that we've already talked about. Total put call ratio fell to a multi-year low at 0.6 in January, suggesting that traders and investors have let their guard down and thrown caution to the wind. Complacency in itself doesn't automatically warrant a market decline, but as the risk reward becomes skewed, any unexpected negative catalyst is likely to have a more significant influence on prices than if complacency was not apparent. We've had other relevant comparisons dating back to 2018 when we reached similar extremes. And so being aware of the risk reward of the market is prudent, given how detrimental an abrupt and pronounced decline can be on equity performance. So with the risk reward heavily skewed, investors should be prepared to act if that market, or if the market, shows more signs of resistance than support, which we really have not seen much of in February until very recently, the last couple of days or so. So when we see sentiment indicators reach extremes, it can often be prudent to look for signs of bubbles, as any pop of one could have cascading effects on risk sentiment in general. Now, does anybody know what this bubble monitor is alluding to? When we may not know when or how a bubble may pop, but it's important to be cognizant of signs of excess or froth. This is semiconductors. Somebody's been doing their homework. Semiconductors or chips. Semiconductor index started to lean in this manner in the month of January. Following an almost 150% gain from the lows in March, the VanEck Vector Semiconductor ETF, SMH is the symbol, started to move in a parabolic manner, becoming well elevated above rising trend line support. Let's look at this chart. Connecting the peaks from the past many months, we can see that the fund poked its nose above trend line resistance right here in the middle of January, since backed off, but now rising rapidly again. These signs of excess are occurring within the optimal holding period for this fund. The period of strength for this ETF runs from January 1st to May 27th. So while a parabolic trend is not necessarily a trigger to sell, when the bubble pops, reason to be more defensive in this industry group would exist, despite the optimal holding period that is upon us. And this could be a useful sector to place on your watch list to determine if and when the air does come out of risk assets, which would inevitably take a broader market toll if realized. There's about 25 stock holdings in this ETF, and if you go down and drill down to each and every one of them, many are extremely parabolic and worth watching for potential topping patterns. Treasuries. Treasury yields charted a short-term peak in January, leading to a reprieve in the selling pressures in the bond market, as we saw the first hints of risk aversion becoming apparent. Caution around earnings or uncertainty around the transition of leadership in the U.S. were suspected as factors. Now, the rebound in Treasury bond prices from the low mid-month is in line with equity market norms, which typically see bond prices rise into the month of February. Now, as we've seen over the last couple of days, bonds are taking an absolute beating. While the longer-term path does remain that of lower lows, we are seeing potential near-term support that's presenting an opportunity to gain exposure in order to help mitigate some of that equity market volatility that can perk up in the first 2 months of the year. So we want us to pay attention to bonds. And so here's a 40-year seasonality chart of 30-year bonds. You could compare this to TLT if you're not interested in 30-year bond futures. So here's a 40-year chart. We got a 15 and 40-year. You can see that we do typically find a bottom, short-term bottom. We trade up, retrace, trade sideways to up before we really make that move into the summer months. So that's what we're paying attention to on bonds, looking for good value entries to get long. Let's talk about the VIX volatility index. Despite the tremendous improvement in markets over the past 10 months, VIX has remained elevated above the gap higher that led to the plunge low of the equity market back at the end of last winter. So I tried to mark this up for you. I don't know if you guys can see it, but we do have a gap here between 19 and 22, a range that's providing level of support to the so-called fear gauge. This elevated level hints of underlying investor uncertainty, despite the market moving to all-time highs and a rotation beneath the surface. So with many indications of a bull market trend for stocks, this elevated level of the VIX is just not normal. Of course, we have numerous uncertainties that persist pertaining to the virus that leads to an overarching concern as well. In January, we could see, this is a daily chart, by the way, we could see it started to perk up around its range of support, starting to show the seasonal tendency that sees a rise in VIX after the first week of January and into the month of February. We've since pulled back, but have not been able to fill that gap. So let's talk about different ways or ideas where we can maintain long equity exposure, if so desired. Traders can find ways to mitigate expected volatility without necessarily adopting a bearish bias in stocks, and can often pick up alpha in portfolio performance and set themselves up well for the spring ramp in stock prices between March and May. That's what we're doing in our RIA Blue Marlin Advisors. So possibilities include treasury bond exposure within the limits highlighted for the long-term ETF, TLT. You could also trade 30-year bond. You trade ZN, which is the 10-year note futures. Gaining exposure to precious metals, such as gold and silver. You could do that via GLD, SLV. There's other leverage metal ETFs that are fairly liquid without playing gold, silver futures, or futures options. And then the US dollar index, dollar futures, DX, that trades on the ICE, or UUP, the ETF. And I will mention that building small positions in VIX and or writing covered calls against that can also be a viable option. Historically, one of the best ways to combat the seasonal rise in volatility the first part of the year has been to invest in precious metals, such as gold and silver. But as we saw in January, traders and investors had alternate plans. They first bid metals up sharply higher and then sold them off mid-month as the dollar index started showing signs of bottoming. And here we have gold represented by the candlesticks, silver represented by the blue line. You see that buyers continue to defend the long and intermediate levels of support. So despite the relatively shocking declines that we saw mid-month, last month, seasonal tendencies are still expected to play out as we progress into this somewhat weaker time frame. So if the simple rule of technical analysis is to buy support and sell resistance, the mid-month pullback to significant levels of support, as well as now as we do this, can present an enticing risk reward to add or accumulate positions. Speaking of the US dollar, one of the two risk assets, including commodities, in the near term is the dollar index, which tends to rise through the first part of the year. Now, we did get a bump up in January. It's since pulled back to the long-term trend, but we could get another bid in the dollar should equity start to pull back. You can see this represented on the 40-year, or actually 36-year seasonality, that the dollar index trades higher. Here's a weekly chart of the dollar. This is actually UUP. See, we broke above the declining trend line resistance in the middle of January, resulting in the loss of buying demand in equity markets. Upside risk we see for the dollar in levels just beyond the 50-day moving average, which could see a test through the next 4 to 6 weeks as negative bets start to unwind a bit. If we do maintain price action above the 50 EMA, that could create a headwind for risk assets, i.e. stocks. So ultimately, the long and intermediate term trend of the dollar remains lower, presenting support to the market over the long term, but the near term period of seasonal strength is definitely a focus, and I feel like that's something that you should keep on your radar. We will be looking at pops higher to possibly re-enter to the short side of the dollar. Commodities, as most of us are well aware, continued to gain strength in January as the price of oil bounced back following news of the surprise cut from OPEC. We look at this ETF, GSG, it's now sitting at the highest level in months, continuing to be supported by its moving averages. Seasonally, the commodities tend to rise from an average low in December to peak in the month of May, with the optimal holding period running from Feb 15 to about May 21st. And that's supported to a large extent by the seasonal fluctuation in energies. We continue to like commodities in general, and this is GSG, as a way to diversify portfolio exposure from domestic equities in the first part of the year. Top holdings for GSG and most of the commodity ETFs are going to be energy, metals, both base and precious, as well as agriculture. Those are some of the best movers at this time of year. Now, we do need to be cautious with ags and some of those commodities. They move fast and they could certainly pull back. Now, we already talked about the first 2 months of the year being really nothing spectacular for stocks, and this is all based on the S&P. It's really one that kind of is the market gauge. I know everybody references the Dow and the news and the talking heads, and that's precisely why we don't listen to them. So over the past five decades, the S&P has averaged 0.1% in February, with the gain frequency being right over 50%. The weakness in the first part of the year is typically met with buying demand into the spring as retirement savings, that money, those funds are put to work, leading to that May or June peak that we've seen in the past. Typically by the middle of February, which is what we're in now, the vast majority of earnings reports have been released, and that vacuum of fundamental catalysts lead to a drift lower in stock prices. So far, we've really yet to follow that average tendency, but we are, of course, on the lookout for any curveballs that may derail equities from seasonal norms, such as what we observed last year. All right, so this is a weekly chart of the SPX. We see we have significant levels of imbalance to where the market can either A, have a respectful correction to, or B, be an area where risk capital could be put to work in indices or individual names. And we'll talk about some of those towards the end of the presentation. After months of trading with this within this range between 3,200 and 3,600, about 400 points, the S&P broke out in the month of November right here, on track towards its calculated upside target of 3,900, which is what we have just achieved. And what happened? This was the target measurement from here to here and then up. What did we do? We hit that and we've since pulled back. Let's talk about sectors. Sectors have immense seasonality characteristics. So let's talk about each of them. Talk about the major ones here. This is XLB, the materials. So weakness in this sector after the start of the year is quite normal from a seasonal perspective. Following the customary ramp in equity prices to the start of the first few days of the year, mostly attributed to fund flows, this sector tends to dip rather sharply, and then February sees a reversal of that early weakness. Now, the material sector has averaged a gain of right over 1%, 1.2 to be exact, in February, and that has occurred over the last 20 years. The ongoing dominant influence on this sector comes from the US dollar, which is in a long-term decline, supportive of commodity prices, and is the ongoing positive backdrop in the manufacturing economy longer term. The dollar, though, as we've already discussed, tends to appreciate or strengthen through the start of March, after which it then reverses lower, once again reinvigorating that tailwind for sector constituents that are so dependent on the strength of commodity prices. So we do remain have a bullish stance of this sector, and it does remain a buy on weakness candidate. You see, we've got areas that we can pull back to. Let's talk about XLI Industrials. Period of seasonal strength for this sector is ongoing, but February tends to be a weak month overall for this cyclical bet. This sector has lost an average of 0.8%, but gains have been realized 60% of the time. Again, that's over 20 years. Manufacturing sentiment is off to a great start in 2021. Positive values are indicating manufacturer optimism, typically coincident with expanding conditions within this segment. This bodes well for core cyclical bets through the spring, such as those in materials, industrials, and energy. Now, with this sector, transportation, machinery, construction stocks, those all present particular appeal into the spring to not only play an economic reopening trend, but also participate in the potential infrastructure stimulus that will possibly materialize under the Biden administration. XLY, consumer discretionary. This has been the bright spot in the economy, showing growth in activity in 2020 that was amongst the best on record. Government stimulus, the creation of self-isolation bubbles have been a catalyst behind XLY. The 2020 calendar year change in retail sales was higher by 8%, and that's more than double the 3.3 increase that is typically average. Consumers, people like you and I, have been buying autos. I didn't buy an auto, but been buying autos, building, garden materials, new homes, sporting goods, all while keeping and developing that bubble close to home. And of course, the passage of another stimulus bill offering direct payments to consumers should help these numbers through the first part of the year, and the prospect of another round of stimulus should follow. That could follow. Should continue to carry the consumer into spring. Now, this is probably not going to be sustainable, but it does bode well for the economy and stocks as long as the government is willing to pour fuel on this fire, i.e. the money printing machine in Washington. For the month of February, the consumer discretionary has averaged a gain of 0.1%, so nothing to write home about. Healthcare. Seasonally, the healthcare sector's average decline, a decline of 0.2% in February. The fundamentals highlight how this sector, though, has benefited from the coronavirus event. Shipments of pharmaceuticals and medicines have been trending above average. A similar above average pace materialized in electromedical devices. So if this is one area of the economy that will see persistent investment coming out of the pandemic, regardless of where we are in the economic cycle, it would have to be healthcare, as companies and governments are seeking to assure that activity is not crippled again to the magnitude that we saw since the pandemic began. XLF Financials has averaged a decline of 2% in the month of February, but this is somewhat skewed because of the 18.4% decline we saw in February of 2009. I don't think I need to remind anybody what happened there. Returns for the month have ranged from an 18.4% drop in Feb of 09 to a gain of 5.5% in Feb of 2015. But financials, they present an ideal way to participate in the economic reopening. Fundamentally, following many months of stagnant consumer loan activity, the last 2 months of the year saw an uptick in this metric. So coming out of a recession is at the point where businesses are able to pay down their loans that clear the way for risk assets. And this was the case in March of 09 and again in June of this year. Of course, risk assets have rallied as investors become less concerned of a credit crisis. So credit conditions are an easy metric to track to determine strains in the economy, which would threaten to take a toll on equity markets, should we see that. Whoops. XLK Technology. Stocks in this space, in my opinion, have become significantly extended and overbought. The tech sector is the go-to market segment that investors and traders seek for growth, particularly around the start of each quarter as new fund flows into the market and are put to work. This tendency is most pronounced during the first half of January. And seasonally, this sector does tend to outperform the market through the middle of January amidst heightened demand. Tech sector, though, has lost an average of 1.4% in February. Gains realized only 45% of the time. But fundamentally, the pandemic has created substantial demand for computers, electronic products since the spring. This has helped support new manufacturer orders for these products. Last year, the value of the manufacturer's new orders for computers and electronic products increased by 11.7%, almost 12%, which is 13% above the average annual change. So that's the second best calendar year performance over the past 2 decades. And this has created a tailwind behind the stocks of tech companies through the spring and summer as investors and traders gravitated towards growth fundamentals. Let's look at the last sector here, XLU, utilities. This sector can realize weakness in the month of February. The sector has lost an average of 1.2%, with 55% of periods showing gains over the last 20 years. But the sector can also be an effective volatility hedge through the start of the year. And that's something that could be added to that slide we previously talked about as ways to mitigate risk. The surge in utility production in the last month of the year is worth mentioning. Production in this sector was higher by 26% in December, and that's much stronger than the average 15.5% that's average for that year. This sector remains an attractive alternative to generate yield in portfolios, especially when you compare the yield on the 10-year just over 1%, with the yield on XLU coming in right over 3%, 3.07%, I believe. So this will continue to make a viable candidate for those that are seeking income in their portfolios. But why seasonality? Silas, there's hundreds of strategies out there. Why seasonality? It's a great question, a logical and thoughtful question that any prudent trader or investor would ask or should ask. But simply put, there are markets, stocks, indices, commodities, currencies that have very distinct and clear patterns that repeat themselves over and over and over again. So the way I look at it is not why seasonality, but why not. And let's get to hard facts. Seasonality has been scientifically proven to beat out every other investment strategy. A study analyzed over 200 years of data across 68 markets, and where they reviewed the returns on several different investment strategies. Trading off seasonality outperformed all other strategies. So it's hard to beat 200 years of proof. So let's highlight some very real recent case studies. Here's a case study on Chevron. We have data that shows where we could enter on a very specific date of Chevron to the short side. We also have data where we look to enter to the long side of Chevron, and they play out year over year. Are there losers? Of course there are, but it's all about trading in line with high probability data. Let's look at another one, Tyson Foods. These are all very liquid names. We have a trade that's been profitable 82% of the time over 11 years. Most traders I know out there are coin flip traders. That means they have about a 50-50 shot of being right or wrong. I would prefer to take a trade that has at least 70, 75, 80%, some cases even 100% winning rates. Here's another example in LEN. We can see 8 years, a potential short on or around October 20th for LEN. That particular trade moved over $10. How did I know to be looking to go long or short on or around these dates? Let's look at commodities. Absolutely works in commodities. That's where I got started my trading journey, is trading commodities and commodity futures, trading seasonality on commodities and commodity futures, and then eventually moved into stocks and the currency markets. That's Nat Gas. Here's another one on live cattle. Does it work in commodities? Absolutely. Does it work in currencies, the FX market? Of course it does. Here's an example on the Kiwi yen, a trade that has occurred over 10 years, 8 out of 10, that's 80% win rate, average profit of 12%. It's 225 pips on one contract. But how do these how do we know this? How do these happen over and over again? Well, it's called seasonality, because the methods I just showed you, you can put these into practice. I've already showed you that ways to get started. You have all the data. That can save you a lot of time alone. Actionable ideas that you can put to work. But with all of that data, I'll admit that was a data overload, I think. All that data, all those years, all those things that we talked about, what has gone on seasonally, what's going on fundamentally. We're talking 20 years of potential data. There's only so much time in the day to crunch through 10, 15, 20 plus years of historical data, price history, cycles, seasonal trends, and more. So I ask, what's next? How do we even begin scouring through years, decades of stocks, futures, currencies, data, patterns, cycles? What if there was a push button solution, literally a scan and go function that could lay out years of historical data out for you on a silver platter? Type a 1 in the chat box. Let me know you're alive if you'd like to see or have that opportunity. I'm gonna take a swig of my water here. Not sure what magenta is. John R, John F. We'll look at XLU. All right, yeah, a lot of ones coming in. Honestly, if you didn't type in 1 or you typed in no, you wouldn't be here wasting your time, right? So when I say a push button solution, I'm talking about a push button solution that delivers the following: a symbol, so I know what the heck to even be looking for. My bias, that goes a long way. Should I be trading in the direction, long or short? Suggested entry date, well, that sure is helpful, because we have 365 days in a year. How about a date that we can start looking at, as well as data that includes the average gain, average drawdown, and much, much more. Everything that provides a framework, the framework for my daily process, almost a money calendar, if you will. So everything that you just saw me demonstrate on those examples. So how do we do it? How do we accomplish all this that would normally take somebody years to crunch through data and whittle it down to seconds? Well, we developed a scanner, and we call it the Smart Market Scanner. We developed one for stocks, futures, and Forex. This allows technology to do the heavy lifting. We are in the year 2021. Why don't we let technology do the work for us? So rather than manually looking through decades and decades of data, trying to spot these patterns, we now have a tool that searches historical trends and patterns for us and locates setups that meet a certain criteria of success. So whether you trade stocks, futures, or Forex, ETFs, options, commodities, there is now a push button solution. So we were able to locate every single one of those opportunities, ideas, signals, alerts, whatever you want to call them, all by using a piece of software so simple that a first grader could use it. They could come in, push the button, and voila, get hundreds and hundreds of symbols. This is Smart Seasonal Stocks. Works just as good on commodities and futures as it does on Forex, as it does on stocks, ETFs, and indices. But how? All by using our proprietary Smart Seasonal Scanner. So how do you access this? How does all this work? It's a great question. And I'm pleased to show you the Smart Market Scanner package and go into the details of how the software in the scanner works. This is your time-saving solution to finding hundreds of high probability setups in only a few minutes each day. And I've been able to put together a very special offer so you have everything you need to take action on what I just showed you. But I want to make sure you fully understand what this is and what you're getting. So let me demonstrate with what you'd be actually receiving. First is Smart Stock software. Covers all the major indices, sectors, and global ETFs, including basic materials, consumer goods, communication, financials, healthcare, industrial services, technology, and utility sectors. You're also going to get the Smart Futures package, 318 markets, all 8 major commodity groups, indices, rates, currencies, grains, meats, energies, metals, and softs, as well as Smart Forex. 37 pairs, all the majors and minors. You can use this to trade standard, mini, micro lots. Really, really great for the smaller funded traders and accounts out there. Let's talk about how do we do it. How do we find and locate these opportunities? Let's walk through the process. So the tool allows us to choose all of the key relevant information we need, like which month or symbol we wish to see the trend for, as well as how often the trend should win. Do we only want to see bullish setups, bearish setups, or both? How long do you want the trend to be? That depends on everybody's situation. Are you a short-term trader? Are you an intermediate or longer-term trader? A minimum of 7 days, 10 days, but no more than 20, 30, 40. We click search, and what would literally take years for you to crunch through is now done in seconds. You're not only limited to a symbol, an entry date, and exit date. In fact, there's enough data here to create an entire computer model. But as I said, I like to keep things simple. And we're going to go through all of this. We can even go back and see how the trade played out historically. If we want to look back at any past seasonal trade, we can utilize the charting component. Go back and visually see the begin and end date for your selected market and what it has done or what it is currently doing in the market environment. One often overlooked, but probably the most important aspect of trading is your risk management, your risk tolerance. You have the ability to fine tune and tailor your own personal risk tolerance levels to see more conservative trades, moderate, aggressive, depending on your own personal risk level. Not Joe's, not Bob's, not Susie's. Use this tool to customize for your own situation. And you have the ability to use the portfolio balance feature or the trade size feature, whether you're sim trading or using a real trading account. And we'll take a look at all this with the scanner demo. You also have the ability to choose what only you want to see. You can sort by priority, which columns take precedence over the other, all the data that only you may want to see. But one of the coolest features of the software is you can also create your very own custom alert portfolio. So you're locating the scans, you're setting the number of days prior to the alert you wish to be notified by either email or SMS text, and you can turn the computer off, which makes it a truly set and forget system. So let's recap what we've covered. You're introduced to the powerful practice of using historical data to guide your behaviors. You also learn how to understand what data you must focus on, what you can't ignore. And you saw several different ways you can spend, shortening the amount of time you spend analyzing charts, all while finding hundreds of high probability setups that you can take action on. And now you can have access to the same set of tools that I use on a daily and weekly basis. And it's a Smart Market Scanner Premium package. This package includes the full Smart Seasonal software bundle. There's actually 3 separate scanners in the bundle, one for stocks, one for futures, and one for FX. And yes, it's the exact same software you just saw me demonstrate. It's going to help you identify seasonal trends that can be identified at a glance with a click of a button, pulling from decades and decades of data. Doesn't literally doesn't get any more time saving than that. As you've seen, offers very detailed statistics showing your optimal entry, optimal exit, and duration hold times. Only the most important information you need, and it does the math for you, calculating your projected profit, drawdown, as well as your average daily profit, drawdown, and much more. But let me ask you a question. If all this did was help you improve your record to generate more wins and losses, what would that be worth? If all it did was help allow you to unsubscribe to all the other tools and newsletters that you aren't even using, what would that be worth? And if all it did was help you place 1 to 2 winning trades a month, what would that be worth to you? But there is one more. What if I could trade aside or along with you each and every week? So in addition to having your own software scanner, you now have even more analysis, including actionable trade alerts that I'll send to you via email and SMS text. So in addition to the powerful seasonality software 3-pack, you're going to get full access to Seasonal Swing Trader Pro. Here we cover at least 10 trade ideas per week, give you all of the relevant data you need, entry, exit dates, average holding time, where to get in, where to get out, weekly video analysis, monthly member sessions, and much more. To give you a better idea of what this looks like, here are some examples from our membership area. You have complete full access to this. Each week, I scan the markets. As you know, there can be hundreds of ideas. I cull only the ones that I feel are primed to move. And not only do I place these cold trades in the members area, I also send an email out every Sunday morning notifying you of the top scan picks of the week. But I don't stop there. I also shoot a video covering each of those picks in greater detail, the what's and whys, the price levels to consider, and much more, all using the methods described throughout the presentation, seasonality plus technical analysis. Next, you're going to be receiving monthly member sessions where you can ask me questions directly live on the call. We run through scans, we look at charts, we discuss upcoming seasonality plays, both short, long-term opportunities, as well as different strategies. They're all recorded, all archived, and placed in the members portal for your viewing convenience. Here are some unsolicited testimonials of the service. Folks putting in some effort, maybe over the weekend, maybe Sunday morning, maybe Monday morning, maybe 15 minutes in the evening before the market opens, scanning for opportunities, individuals taking action. So if you'd like access to the same tools, resources, and ideas that these and several hundred other members enjoy, then I suggest you take advantage of a very special I have in store for you. But I do want to reward those that are taking action. This special is only limited to the first 10 spots. So in addition to the scanner and alert service, we're going to bonus you with 3 special gifts. First is the Chart Pattern Principle course, 90+ page PDF manual with additional strategies, patterns, seasonal trends, setups, and more. Also my 25 top option strategy guide. And then lastly, VIP email support. We have to limit this to 10 spots because VIP email support entails direct access to me. I do manage my own support. I do have a tech guy that handles the tech side of it. But yes, I will personally respond to you, work with you. I enjoy it, actually. I don't get put off like other people out there do. I'm not going to name any names, but I will actually work with you, reply to you. I welcome your input, your feedback, your ideas, your questions, things that you'll be looking at. And one more extra bonus that I failed to mention is you'll get access to our Discord channel. And that's a channel where we post our ideas each and every week, post chart setups, and talk about the ideas that we're opening or closing. Okay, so I do suggest if you are serious about your trading and you want to take the next step, here is your offer, Smart Market Scanner Premium Package. The offer is seasonalswingtrader.com/scan. You're going to get access to the complete seasonal software bundle. You're going to get access to Seasonal Swing Trader Pro, custom trade alerts through the scanner, and all the bonuses just mentioned. So I'm going to put that into the chat. This is annual access. Get it for 1 year. It does not auto renew. You don't have to be worried about getting dinged or auto renew for some charge. If you wish to continue, there's the offer link there, cecilswingtrader.com/scan. If you wish to continue to a second year, we will send you an email reminder as you approach the end of your first year. You'll be able to continue at a significant discount. So I've got lots of questions here, and I'm going to get to those. I want to talk about training. Again, we try to make this as simple as possible. The software is very easy. In fact, we're going to bring the software up and go through it. But you're going to get training, 13 really nice bite-sized modules, just going down into all of the components of the software. It's nothing complicated, folks. You're also going to get almost a 50-page PDF manual. You can download, print it off if you want to read and look at it a little bit more. Here's an example of the members area. I'll also be happy to show you what that looks like. This is an example of the members area. You'll have download access for stocks, FX and futures, your training guide, and all of your tutorials. So here is the offer link. Once again, seasonalswingtrader.com/scan. And what I'm going to do, guys, is can everybody see this? Give me a thumbs up if you can see the software. This is Smart Stocks, and then this is Smart Futures. And I don't have Smart FX, but they're all the same. So let's just do a little bit of a walkthrough here so you can see exactly how it works. You're really, as the end user, only going to be inputting data or variables into about 4 or 5 areas. So here we can say we want to search by month, or we can search by symbol. Okay. Next, do we want to find trades that have been profitable 70%, 80%, 85, 89, 90, 100, whatever that is? Then we can search by either both bullish and bearish, or just bullish or just bearish. I know people that only like to trade to the long side. I get it. The market has historically gone higher. I like to look for both bullish and bearish opportunities. Here is where you can manipulate this data. If you're a short-term trader, maybe you like to be in and out within the time frame of a week. You can say trades that last at least 2 days, but no more than 7, and so on and so forth. And then here's where you'd put in how many years of data you actually want to see. You hit search, and based off this data, it yielded 397 results. That is a lot of data. You can sort all of this data. So we can sort to find, top down 100% all the way down to 90%. We can sort it by score, only the highest scoring from 5 all the way down to 0.01. We can sort it by start date, win percent, symbol, company, average profit, and so on. Scroll it here. Here's all the data that you can see and have access to. We hit column options. We can add or remove whatever we want to see or don't want to see. Here's our column preference. If we want, say, start on open to take precedence over trend, trend takes precedence over score, we can do that. And you'll notice that we have this over here. Now, if you click on this, you'll see that the data is changing. Now, when we click on that, we can also click or select these boxes over here. This is simply an equity curve, meaning that this is based on $1,000. This can also be changed. I'll show you that in a second. You can base this off 100 shares, 250 shares. This 1,000 is a percentage based off my hypothetical portfolio in the scanner. I'll show you what that means. But if you bought $1,000 worth of PGR every year from its suggested start date and close on suggested exit date, this is your equity curve. Don't we all like upward sloping equity curves? Of course. Here is a table, year by year breakdown. Now, this would probably have been a 100% winner, but we had last year's situation, and we know what happened last year at this time. Here's your risk reward table, a probability graph, and then here's a year by year, just from a statistical perspective. If you bought and sold, here's the price, intraday, exit date, exit price, based on $1,000 invested. All right, so let's say that after we look through our 390 results or whatever, we like just these first 4. We can select these first 4. We can click add to step 2. Step 2 takes them to a portfolio. Here is where we can run our neural network scanner and user preferences. So the neural network scanner, we can base that off a conservative, moderate, or aggressive risk tolerance. All this is listed out here in much more detail as well as in the manual. Here's what I was talking about. We can put in a balance. It could be a demo account, it could be a live account, it could be your rollover IRA, whatever it is. It puts, say, I want to allocate 2% per trade, 5%, 10%, whatever that is. Or if you want to do it by a fixed quantity, 100 shares, 200 shares. And when you do this, whatever you decide to do here, it's going to reflect. So if you notice that I chose now quantity based on 100 shares, if we go back here, you'll see that it's now based off 100 shares, okay? Now, let's see what happened in old MSI. So here's MSI, here's the start date. It looks like we're still in, this one will end tomorrow, February 19th, okay? So we close that out. And let's say that out of these 4, we only really want to maybe add these 2, maybe these 3. We could then add those to trade alerts. We click add to trade alerts. This is where we set up our custom trade alert. We could set these up to come to us through email, or we can put our phone number here and have them come to us as a text. So you can set these up. You could choose come to you 1 day prior to the start date, 2 days, 3 days, 5 days. Then you can shut the platform down, maybe reopen it next week. You don't even really have to look at it. You know the data, you know the stats are going to come to you through email or SMS. Does not have to be running in the background. Let's talk about settings real quick. So here's where we can run our scans based on S&P, NASDAQ, Dow. If we want to scan in financials, technology, utilities, we can do all that. And we can create our own custom watch list. So what we would do is just select new, and then we would come in and add or remove whichever markets we wish to see or not see. Let's say you want to create your own watch list, maybe 30 stocks that you like to follow, or maybe you have 10 stocks in your trust account. Whatever the case may be, you can create your own watch list. All right, so I want to quickly go through the demo. Now I'm going to get back to answer these questions here. So let's see here. I think I answered this earlier. Yes, it can absolutely be used for financial and commodity futures. In fact, I love seasonality on futures, and that can all be done here with the Smart Futures software. Now, I do want to show you as well the members area. So if you look at the members area here, and you can download these, all 3 of these. You have access to all 3, but if you don't trade one particular asset class, you can just ignore. So we click on, say, stocks, and that's going to take you to the stock download page. The computer's a little slow. There we go. So here will be the download, and then your training manual, all of your training videos, and then all the monthly member sessions that are uploaded there for you. Oops, didn't mean to do that. All right, so let me get to John, you're going to get all three. You get access to all three. So right now we do not have it broken out into just future stocks or FX. You're going to get access to all three. Do I have statistical analysis of how accurate the software is? Well, the accuracy is based on real data. It's not just some software making up numbers. This is your back test. This is real data. So this is how accurate it is. It can be as accurate as you want. If you want 100% accurate, then you can run scans only to see 100% accuracy. If you're okay with coming down, being 70% accurate, which is pretty damn good, then you can run 70% scans. Obviously, the higher these numbers are, the less results you're going to get. The lower these numbers are, the more you're going to get, because you're only looking now. Say, if you're going to say I'm only looking for stocks that are 70% greater versus 90%, you're going to have a lot more results. But if you increase that from 10 years to 20 years, then that's going to decrease that amount, so on and so forth. There are lots of good candidates, 60, 65, 70%, and of course greater, that are solid. They're solid candidates. So I think you do yourselves a little bit of a disservice if you're only looking for those that are 95, 100%. You should look at 80, 85, and perhaps even down to 70, depending on how much data you want to look at and how many markets you want to look at. I think we have 7 units taken. You can email me at support@seasonalswingtrader.com if you need to talk about it with somebody, i.e. your significant other or whoever. Yeah, we will hold a spot for you. You do not need to be connected to any data feed. The data is included. I trade options. This looks great to trade options on. Yeah, you can. A lot of members and students do trade options. A lot of them are not trading the underlying, whether that's equities or commodities. Yeah, you can absolutely trade the minis and micros. Of course you can. So you know, if you're interested in commodities and futures, not only can you drill down and trade the minis, you can also trade the commodity ETF. So there's not a commodity ETF sector in here. We don't have commodity ETFs sectors. But if you find a trade on corn, you find a trade on natural gas, hell, even the S&P or bonds, you can trade SPYs, TLT. You don't have to trade the actual underlying commodity. You're very welcome, Brett. Glad you enjoyed it. Yeah, Doug, I'll take a look at the 30-year. So results. There's actually, I had this bonds pulled up before we came into the presentation because I'm actually looking at bonds. We talked about bonds and treasuries in the presentation, kind of the outlook, but this was one that is on our radar for our members at the moment. We're not long bonds right now. We're not short bonds either. We're flat, but we're watching them closely. So if I run ZB 30-year bonds, and let's say 90% of the time, and let's say trades that have lasted at least, I don't know, 7 days, but no more than 20, we can hit search, and we found one result. And it started yesterday, a bullish trade that ends on the 26th, so it's about a 10-day calendar trade. 91% win rate. There's your data. pretty darn good if you ask me. Look at last year. Wow. See here. This would be next for swing trades on the futures. I'm not sure if I totally understand, but yes, I do not use this to day trade, but we do have a module in the members area on day trading with the scanner. So one, I don't day trade stocks, but you could use this to day trade futures and FX. I personally do not use the scanner or incorporate seasonality in day trading. I'm using seasonality for intermediate swing type trades. I use other strategies and methodologies for day trading, but you can do that if you wish. And the way you do that is if you're crunching this data, looking for trends that may last, 2-3 days to 5, 6, 7 days, you're understanding that bias to help give you an idea of what direction you can trade. So it's not going to say, well, based on the seasonality, you should buy at 10:05 a.m. I'm being sarcastic. I'm being a little overboard there, but I think you understand. Cannot specify the time period. So you don't pick the dates. You pick the symbol or you pick the month, and then it's going to spit the data out to you based on what criteria you have selected right here. Okay, this data right here is going to spit out the dates, and then if you want, a specific day, you come down and you can do your sort by start and end dates. We can't right now. There is no trial right now because you get a license key. A license key is generated for the software. There is no trial. We may look into that. It's just not available right now. Can you scan for best sectors and then find the best stocks in that sector? So if you scan for the best, I don't know what you mean by scanning for the best sector. I guess what you would do is scan a individual or a specific sector. So let's say, you scan basic materials, and when you scan for basic materials, that's going to give you your highest probability statistical data, and it's going to give you the symbols under each of those. So I don't know if that's kind of a backwards way of answering, but I tried to. So you're going to scan for materials or scan for healthcare, whatever, and inside of that, that's going to yield the highest probability candidates. This is for an entire year. So the alerts that I send out are, of course, based on the scanner. I mean, that's how we get ideas, right? Now, I will alternatively find other ideas that may fall out of the scanner realm, but they're primarily based off the scanner because this is what we're doing. We're trading in line. We want to be trading in line with seasonal data. But as far as like special case situations or whatever you want to call it, yeah, I'll send ideas on markets that may not be in the scanner, ideas that may be applicable to a current situation or event. As far as Mac goes, it will work on Mac if you have one of those parallels, such as I think it's like Windows Boot Camp. I think there's, I don't know all the names of them out there, but there's different programs and software out there where you can run Windows-based programs on a Mac. So yes, You're welcome, Robert. I appreciate you signing up. Look forward to you joining. All right, so yeah, let's look at a couple of markets here while we're winding down. I'm not quite sure what if all 10 spots are taken, but I did want to show you some markets that I'm watching here that you can take a look at. A lot of these are based off scanner results. So let me close that. And first one here is Domino's. Looking for bullish trades on Domino's. Now we have earnings coming up, so that will keep me on the sidelines. That will keep me on the sidelines through earnings. I will, on occasions, hold trades through earnings, just depending on the stock, expected volatility, things like that. One trade that we were in was Coca-Cola. We were in a bullish trade on Coca-Cola that we exited before earnings. It was a fairly low risk trade. I did it with defined risk, bull put spreads. That one ended up being a nice trade to the upside, continues to move higher. TMUS, T-Mobile, is one that is on our watch list for a bullish trade. CHD, Church and Dwight. I'm a little skeptical of the volume on this one, but we do have a high probability seasonality play there at CHD. SJM is one that we're watching. You can see what kind of the defined measures that we're looking here. Hershey's is another one. Had a nice bullish day today in Hershey. Dominion Energy is one, as well as CL Colgate, which is one we're long in currently at the moment. A couple other some trades to the short side that you can put on your radar that appeared on ours today or this week was Oxy, Occidental Peat, trading into longer term resistance structure, as well as trading in line with seasonality. We're also looking at CF as a potential trade to the short side. FFIV is another one. You can see that's moving nicely as anticipated. Mosaic, another one moving to the downside. And then NUE, Nucor, rejecting at levels that we predefined in our weekly videos, and now trading in line with seasonality. This is called TradingView. This is a free platform. So I use day to day, I use TradingView primarily as my web-based platform. I've got a PC next to me, a totally different computer setup that I'm running Thinkorswim pretty much all day, every day, running Thinkorswim in the background. Also, so TradingView is one of my favorite charting platforms. It's very mobile friendly. It's clean. I like it a lot. I just unfortunately can't execute equity options off of it. So I do like Thinkorswim charts as well, but that's where I do my execution through Thinkorswim. I've got accounts with Ninja and TradeStation as well. Don't really use TradeStation. I do Ninja, some back testing things on Ninja, and then MT4 as well. But this is TradingView. You can open up free if you want data plans and things like that. There's different levels. I think you can get started, the basic plan, no cost. Do I trade futures on Thinkorswim? Do not trade futures. I will trade futures options. Probably, as you know, if you don't trade, if you do use Thinkorswim, they do not all commodities are tradable, or at least commodity options are tradable on Thinkorswim. So I have another futures account through an IB that I do the commodities and commodity options on. TOS is mainly for equity options, occasionally 30-year bond options. I've done some of the grain options, nat gas options, crude options on Thinkorswim. Does it run on TOS? No, this is not, the scanner doesn't run on any platform. So you can be using Interactive Brokers, Sierra Charts, WizTrader XYZ. It's broker neutral and data neutral. You don't have to connect to any brokerage, any platform. This is independent, so it doesn't matter what you use to chart or what you use to trade from. Yeah, I mean TOS. I love TOS, and I wouldn't say I have a love-hate relationship, but I love TOS. But there are some things that frustrate me sometimes. And then when it comes to the programming side, they're not as robust as I think they could or should be comparatively to like Ninja and TradeStation. But I used to use Ninja a whole lot. I used to actually use TradeStation way back in like 05, 06, but I have a hard time navigating around TradeStation. So yeah, it does not matter. If you want to pay via PayPal, you can email me support@seasonalswingtrader.com, and we'll have to create a separate link for you. But that is an option, and we can reserve that for you. You're welcome. All right, gotta go. Take care. No problem. All right, gang. I think we'll go ahead and wrap it up. Let me do one quick check here, make sure I got all the questions answered. Yes, of course, you could email if you have questions anytime. We don't buy it around here. If you have questions about this entire presentation, about the methodology, about the scanner in general, you're having trouble, access questions, logging in, downloading, shoot us an email, myself and or tech support. He is clocked out for the day, but we'll make sure to get to you and handle you. All right, we're going to go ahead and wrap this up then. If I miss anything, I apologize. Here's the offer again. It's seasonalswingtrader.com/scan. I appreciate your time. Stay safe out there. Bundle up, stay warm. Hope everybody has a great rest of your day, and look forward to seeing all the new members on the inside. Take care and talk soon.